Good morning, everyone, and thank you for joining Hazer Group's investor webinar. Today, Hazer will be updating you on the progress of the commercial demonstration plant. On the call today, we are joined by CEO Corrie, who will discuss the recent developments of the CDP, as well as give you more context on Hazer's plans for 2023. We will answer your submitted questions at the end of the presentation. If you'd like to ask a question, please use the written Q&A facility at the bottom of your screen at any time during the webinar. The session will last 30 minutes. I'll now hand over to Glenn to begin.
Thanks, Krista. Hello, everyone, and thank you for joining us on our webinar. We are very glad to be able to share our thoughts on our announcement that we put out this morning and hear from interested investors as well as shareholders. I've been on seat since October of last year, and this is my first time holding a webinar with the Hazer shareholders, and I'm very eager to keep everybody updated on our progress, and we'll try and hold these events more frequently going forward. As far as I'm concerned, the Hazer story is far too good to be kept under wraps. We put out an update this morning on our CDP, or our commercial demonstration plant, and we'll talk to this shortly, and then we'll open the call up for Q&A. I'll move to the next slide. Before we dive into the details of our CDP update, I wanted to just take a few minutes to discuss our strategy. Hazer Group is a disruptive hydrogen technology company that is driving global decarbonisation efforts by commercialising our proprietary Hazer process, a world-leading, low-cost, low-emissions methane pyrolysis technology that enables the production of clean hydrogen and high-quality graphite. Our vision is to be a leading contributor to global decarbonisation, especially in hard-to-abate and difficult-to-electrify industrial sectors. We have worked extensively on our strategic roadmap in the past few months to map out our business plan as well as our strategic priorities. There's three key pillars to our strategy: commercialise, scale up, monetize, and grow, bringing our CDP online this year and concurrently scaling up 25 times our technology over and above our CDP in North America and Canada with Suncor and Fortis are key enablers to our strategy over the next 12 months. Behind this, we have a very broad and large pipeline of new potential business opportunities and projects that we expect to be advancing in our target markets of Asia, North America, Europe, and in Australia. In terms of our CDP, just a bit of a recap. We have successfully, as many of you are aware, we've successfully scaled up now our technology 5 times already. Our technology is very well advanced. The objective of our CDP is to demonstrate our technology at an industrial or commercial scale on a continuous basis. The nameplate capacity of our CDP is 100 tonnes per annum of hydrogen. That also gives rise to about 380 tonnes per annum of graphitic carbon. At our CDP in Perth, Australia, we have a carbon negative process because we are taking biogas as our feedstock, and this has also attracted ARENA, Australian Renewable Energy Agency, funding to the tune of around $9.5 million. In terms of our announcement this morning, you'll have seen that we reiterate our guidance that our CDP remains on schedule for startup of operations in the second half of this year. That's the calendar year. As mentioned in the announcement, we have reviewed and extensively reworked our schedule to explore opportunities to accelerate and mitigate risk following the setbacks that we experienced mid-last year. I'm now very confident we have a robust plan with built-in contingency to deliver. Of course, there's risks with any schedule, and we will continue to assess these and update throughout the year accordingly. The CDP construction was completed last year, and I'm sure many of you are aware of that. We have 2 outstanding bits of equipment to be installed. That's the heat exchanger and the reactor. We have now developed 2 heat exchanger options. Both of those are in flight with very credible tier 1 European suppliers. One of them has available stock in the warehouse, so that it also helps us to accelerate what was previously a critical path item to our schedule. In terms of our reactors, we have 2 reactors in flight. We have Mark 1, or our Generation 1 reactor, coming from Italy, and our Mark 2 reactor, which is being developed, designed and engineered and fabricated by the Hatch Group in North America. Both of these reactors are progressing well. All going to plan, these will arrive. Both of these pieces of equipment will arrive onshore in Australia and be ready for installation around the middle of the year. In addition to that, we've also taken the opportunity to add additional bench strength to the Hazer Group. In particular, the addition of a dedicated project manager for the CDP project, as well as additional engineering resources to ensure that we keep an eye on any of the risks associated with the CDP as we move forward throughout the year. Starting up our CDP is a strategic priority. I'm very well aware of that, and we are laser focused on the project delivery of that project throughout the year, and in terms of our guidance of the second half for a ready for startup. Last slide, we have a very busy year ahead. We have also talked already to the CDP quite a bit, but we have a number of operational milestones ahead of us. We've got ongoing procurement and fabrication, as well as engineering and installation milestones. We have equipment arrivals and installation towards the middle of the year. We also have the potential for graphite offtake. Of course, you know, we have, for every kilogram of hydrogen, we have 3.8 kilograms of graphite. We are very keen to establish a pricing market for this and evaluation. And then finally, we will start up our hot commissioning phase in the second half of the year as broadcast. In terms of our project in Canada with Suncor and Fortis, we are progressing well on our feed studies for our main plant, which is 25 times our CDP, 2,500 tonnes per annum. We are very proud to be working with world-class partners there. It's a very exciting project with real commercial application, where we are decarbonising the Vancouver pipeline network, which touches around 200,000 people. In addition to that, we will have around 10,000 tonnes per annum of graphitic carbon for potential offtake and marketing, which is also going very well. In December of last year, we announced that we joined forces with Mitsui. Mitsui is a leading Japanese commodity trading group, one of the largest, in fact, to explore the markets for our graphite. We are very encouraged by the results that we are seeing thus far. It has been already of interest to a number of industrial groups that are working in hard to abate sectors as a possible replacement, by example, for coking coal in the steelmaking sector. Of course, many of you will be aware that the green steelmaking initiative is also gaining quite a bit of momentum. So we'd be very delighted to be playing a role in that initiative. There is a lot of interest in Hazer technology for potential projects in target markets with industrial groups and hard to abate sectors in Europe, Asia, as well as the US. We're very encouraged by the US market. I spent a week there just a couple of weeks back, and of course they are benefiting from the Inflation Reduction Act. So there is a lot of investment that is being ploughed into the hydrogen sector as well as the technology sector, which we'd like to take advantage of. New projects we've talked about, and of course there's corporate updates on the way. We have made mention in previous announcements of our R&D rebate. We have put in a claim for up to $9 million of R&D rebate, which does, when it's through, add quite a bit of liquidity to our existing cash position. I will pause there, Krista, if it's all right, and we'll open up the lines for Q&A.
Thanks, Glenn. We will now move on to the Q&A session of the webinar. I'd like to remind you now that if you wish to ask a question, please use the Q&A button at the bottom of your screen and submit a written question. We'll try to answer as many questions as we can during the time remaining. If we don't get to your question, please submit it to the email address you see on the screen, contact@hazergroup.com.au, and we will try to get back to everyone regarding their question. We did receive a few questions in advance, so we'll kick off with that while you get your questions into the system. First question is around what is Hazer's current cash and funding position and outlook regarding funding?
That's a good question, Krista. So reported cash position last December, I think to the 31st of December 2022, we had $12.5 million of cash. As I mentioned, in addition to that, we have a claim in for an R&D rebate of up to $9 million. So it does increase our liquidity, all going to plan there to somewhere between $15 and $20 million. We have also had good discussions with the Arena Group, and of course we announced last year, or it might have been in January this year, that they have also accelerated $3 million of cash as a result of us hitting particular milestones associated with the CDP. So for a pre-revenue company, we have a robust, what I would call a very robust funding position with funding flexibility.
Thanks, Glenn. We are starting to get some questions in, but I have one more that was submitted in advance before we get to those. When will we know phase 1 has been successful? And then what is the next step after the hot reactor is installed?
Okay, good question. So back to the CDP, our objective there with the CDP, of course, is to demonstrate our technology at an industrial and commercial basis on a continuous timeline. So our previous scale-ups, of course, we've done it 5 times, have been on what I'd call an interruptible basis. So this is the first time we are doing it continuously and at a commercial scale. So a very important and exciting milestone for us. Of course, we had some challenges last year that we've addressed with our revised plan that I've just spoken to. So what's going on at the moment? We are doing effectively operational readiness work in preparation for the installation of our hot equipment, as I referred to previously. 2 outstanding pieces of kit, the heat exchanger and the reactor, due to arrive middle of the year, thereabouts. Of course, they will then be installed. There's engineering work ongoing at the moment to prepare for that. We have also engaged the Hazer Group out of Perth, Australia, to assist us with some of the engineering, the integration phase of in preparation for the hot operations. Once that's installed, we will then be ready for a startup. The startup phase we have again for the second half of this year. And then we would expect to be in what I would call a optimization and a final commissioning phase thereafter, where we bring it up to temperature, we start producing hydrogen and of course graphitic carbon, and that we will be taking data assessment over the course of the coming months beyond that, to ensure that we can optimize the technology in preparation for commercial scale up.
Thanks, Glenn. Now, can the CDP schedule be fast-tracked now that cold commissioning is finished?
Great question. We're doing everything we can. We've actually taken off the critical path some of the equipment materials and the material supply. As I referred to, we've got 2 heat exchanger material suppliers now effectively on order. In addition to that, we have 2 reactors on order. So we've taken into account the learnings of last year. We are working with tier 1 suppliers in very credible jurisdictions, Europe and North America. On the reactors specifically, we are working with the Hatch Group and a very credible group out of Europe. So we're very confident in terms of delivery of a reactor. On a heat exchanger, to be honest, it was a bit of a surprise that that thing didn't actually meet standards. Heat exchangers typically are quite standard in industrial processes. So that said, we've got 2 heat exchange options, as I spoke to. We brought those off the critical path as a result of a lot of the hard work that the team have done. And as I've said, we've got a dedicated project manager and a larger team to work through the plan. So what effectively we are now doing is looking at our commissioning and looking at the rest of the phases of the project to ensure that we keep working it and accelerating it where we possibly can to continue to bring it forward. We realized it was a target for last year. We've made adjustments for that, and I'm confident and very optimistic that we are on track to deliver this year.
Do you have an offtake agreement in place for the CDP? And if not, how is the current demand for hydrogen in Perth?
Well, that's a great question. We get it a lot, where the CDP is a demonstration project. So we're not necessarily in Perth to provide hydrogen and graphite to the Perth market. Of course, we'd love to, but the most important aspect of this is to get the technology ready for commercial deployment in much larger industrial sectors in Asia, Europe, North America, and if we can, Australia. There will be offtake opportunities. The hydrogen market in Perth is not very well developed, but where there is a market, we will tap into it. We do have a fuel cell installed at the CDP, and we will be, of course, taking every opportunity to utilize that. On the graphitic carbon, it's a little bit of a different story. As I mentioned, we've been working with Mitsui Group out of Japan. There's been a lot of interest in the carbon product in these early stages. In the 2 or 3 months that we've been working with them, there's a lot of feedback on the quality of it. It is a high quality graphite product, which is very different from some of the other methane pyrolysis technologies. So we have got a competitive advantage in that respect. And it does, by way of example, fit quite nicely into the steelmaking process or the green steelmaking process, because we have got small iron ore impurities in our graphite. So today it's attracting quite a bit of interest. I would be delighted if we could secure offtake. Those discussions are underway, and I'd expect that between now and the end of the year that we do secure some sort of offtake agreement for our graphitic carbon. And that will, if I may, Krista, that will also establish a pricing marker for it, because it's the first time that we'll have essentially sold our graphite into a commercial market.
There are a few questions around the graphite in the Q&A, so I'll run through them now.
Yep.
Have we been testing our graphite in lithium-ion batteries, and when can you tell us about the prospect?
Another great question. We have been testing our graphite for years. And as I said, it's a unique product that is attracting quite a bit of attention. The market is evolving, I must say. Since I've been on seat since October of last year, I've seen the market already for our graphite and the interest in it accelerate. That's exciting. We don't necessarily know where it's going, but we do know the graphite market is quite large. Now, a lot of the graphite market, by way of background, the supply comes out of China. So it's nice to be able to think about another source of supply for large volumes of graphite. But it is a premium product relative to some of the other amorphous carbon blacks that are produced through methane pyrolysis. So we do have that competitive advantage. We have tested it in the battery technology. We have tested it in water purification. We have looked at the carbon footprint of it. So we are doing a lot of R&D around the graphite. It does work in all of those ranges. We can see purities of graphite up to potentially 95% graphite. So we see a broad-ranging, quite attractive market emerging over the coming years. And of course, as we build up to commercial scale, our partnership with Mitsui, which we think has validated or helps to validate the value of our product, we can see that market emerging year in and year out as we move towards a large-scale build-out of the technology.
I guess following on a little bit from that, are you exploring adding graphite to concrete to sequester it and improve concrete quality?
Possibly, that's another application. So again, I think our graphite has wide-ranging applications. It is for the scientific folks out there, it is a structured graphite product. So it is available to be used in areas where you wouldn't normally use graphite or carbon black. We're not just looking at potentially the tire market. We are looking at a broad range of potential markets for the graphite. And again, for every kilo of hydrogen, we get near 4 kilograms of graphite. So it has got potentially large value for us as we work through our economics. And a lot of the interest again has come out of we've got dual products. We produce clean, low emissions hydrogen, as well as potentially valuable graphite that can be used in industrial sectors as well.
Okay. And another one on graphite before we move to some of these other topics. For the CDP, what is the plan for the graphite that is produced?
Yeah, so I think I referred to that. We will have around 380 tons per annum of graphite, and we will be marketing that graphite. And that process is underway. We are looking at potential to market and sell that graphite into international markets. With the help, of course, with groups like Mitsui that have worked with us, we are very optimistic that we will find a market for it, as well as a price marker for it as well.
Thanks, Glenn. Moving to a new topic, can you tell us more about Engie, please?
Engie, yeah, I should mention that we have established what I think is a very strong partnership group around the world. And I will also mention that our technology is what I would refer to as an integrated plug-in technology to existing infrastructure and industrial processes. So we can be modularized and put into, for example, Japan or Korea or Taiwan or Singapore or a market where there is existing steam methane reforming, and we can be replacing that. So there's initial disruption there today. So we, of course, have established publicly relationships within Asia with Mitsui and Chiyoda. We're working on others. In Europe, we are very proud to be working with the Engie Group. That relationship is evolving. The European situation is one which is quite advanced in terms of the carbon market and understanding carbon emissions probably better than most in the world. So we're very, I guess, delighted to be part of that opportunity. Engie in particular is a very large gas distribution group, not dissimilar from the Fortis Group in North America. They like our technology. We are looking at and exploring opportunities of taking the Hazer technology, using LNG and gas in Europe and in France in particular, and potentially using that hydrogen that's produced to blend into the existing Engie natural gas pipeline network across France and Europe. Those discussions are ongoing, and we hope to be able to provide more information throughout the year on that relationship. In North America, of course, I mentioned that we're working with Suncor and Fortis in Canada. We are very excited about the US market. It's an area that we're going to spend a lot more work on. The Inflation Reduction Act has really provided the US market with a lot of momentum in terms of hydrogen and also technology development. In fact, for the right technologies, there is a tax credit of up to $3 a kilogram for hydrogen technologies, and that will position us very well as one of the lowest costs in the market if we can tap into that market effectively.
Thanks, Glenn. I think we'll try and get one more question in. Are you able to tell us a little more about your background?
My background? Okay. Yeah, sure. So for those of you who don't know me, I started my career with the Shell Group globally. I worked in the gas industry for a long time, and I consider the gas industry and the LNG industry to be the transition space these days. So 10 years with Shell in global locations, a lot of it in Asia, on the M&A side, on the commercial and the strategic aspects of the Shell Group, in particular LNG strategy. So a lot of exposure to gas. I then went off to do an MBA with a US business school. I came back to Singapore, worked for the Temasek Group, Temasek International in Singapore, one of the sovereign wealth arms of the Singapore government, where I was responsible for oil and gas investments as well as renewable investments. I think in that time we deployed billions of dollars of capital into gas transition assets as well as into renewable energies. After that, I did a couple of corporate roles, two CEO roles. One that may be familiar with some of the Australian shareholders was a company called Sino Gas and Energy, which was one of the largest listed energy groups actually at the time when it was taken private. I think we were about $600 million at the time. That company was a China-focused gas group where we were supplying natural gas into the Chinese gas market and converting coal-fired power stations into gas-fired power stations. So again, a commercial application in the transition space. The company was one of the largest independent producers of natural gas in China at the time. It was then taken over by a very large private equity group based out of the US. Since then, I did another CEO role in the United Kingdom, which was backed by some private equity groups based out of Norway. And then I was attracted to the Hazer Group for a number of reasons. And I call them the 3 or 4 Ps. It was potential or prize. It was people. It was partnerships in particular. We have great people working in the company that have developed this technology, including our founder, Andy Cornigio, which is still with us and playing a very key role in growing the technology and the technology development aspects of it. The prize is enormous, and I'll come back to the fact that we are a disruptive technology. And the reason I call it disruptive is because 95% of the hydrogen market today is produced by a technology called steam methane reforming. Now, one of the challenges of steam methane reforming is that for every kilogram of hydrogen that is produced with SMR or steam methane reforming, there is 9 kilograms of CO2. So it doesn't provide a climate solution, it actually provides a problem. And so that market today, which is 95 million tons per annum of hydrogen, which is a quarter of the LNG market, is ready for disruption today. And that's where Hazer nicely fits into that market as a disruptive technology, replacing steam methane reforming with clean, low cost, low emissions hydrogen. And then finally, partnerships. I'm very excited about what this technology can bring. Our partnership model is evolving. We have attracted tier 1 partners in target markets of Asia, Europe, and North America, as well as Australia. You know, the prize for this is big. I've talked about that. We are a double bottom line company. In my view, we will create value ultimately for shareholders. I'm very confident of that. But at the same time, we will do it with the planet in mind. So I think it is a fantastic investment opportunity for people out there. And we are one of the only listed hydrogen technology stocks worldwide. So if you're looking for a proxy in terms of investment, the Hazer Group is one of those.
Thank you, Glenn. We'll be drawing this webinar to a close now. The recording of this webinar will be available on Hazer's website in the investors page, and also sent out to people who have signed up for the mailing list. If you did put a question into the queue, we know there's some that we didn't get to. So we'll be sending around answers to as many of those questions as we can. Please send any further questions to contact@hazergroup.com.au. And I will now hand back to you, Glenn, for any other closing statements.
Thanks, Krista. So as I said, this is the first time that we've done this, so your feedback is very welcome. We will try and do it more frequently and regularly for shareholders. Look, I'd like to thank everyone that joined the call. Hopefully I'll get the opportunity to meet some of you face-to-face over the coming months and years. And we really appreciate your ongoing support that we have from our existing shareholder base. We know it's not been the easiest ride over the last couple of years, but we have got a really robust plan, in particular to deliver the CDP. We've been working that tirelessly and rigorously for the past couple of months since I've been on board. So I'm very optimistic and confident that we've got a plan that will really help us to deliver on our milestones going forward. Look, on hydrogen, we're true believers in the application of hydrogen worldwide. We understand climate change is a problem. We offer an immediate solution to that. So you'll hear more about us in that respect. And we are really well positioned as a serious player in this market. You know, our technology is game changing. And we've got a lot of it locked up under intellectual property. So we're the only ones doing it on a low cost, low emissions basis. 2023, a super important year for us. I feel the stars are aligning. The hydrogen market's large, it's growing at 6% per annum, well positioned as a disruptive technology that's got a really strong competitive advantage relative to the peer group. As I say, our CDP online this year, another scale up of 25%, 25 times in Canada with Suncor and Fortis, and plus a deep pipeline of what we think is future opportunities for deployment of the technology. Tier 1 partners in target markets, Mitsui, Engie, Suncor, Fortis, and others. We're robustly funded, as I said in the beginning, with lots of financial flexibility. And we hope to leverage the recent government reforms. We know the Australian government is also reviewing hydrogen, the national hydrogen strategy. So we're looking forward to being, a homegrown technology that can also play a role in the Australian market. We are about fueling the hydrogen market and creating a long-standing partnership with some of the biggest energy players in the world. I'll leave it there. Look forward to future webinars with everybody in the coming months. Thanks, Krista. Thanks, everybody.
Thanks, everyone.